The Money Show.
Personal Finance with Warren Ingram.
And Warren Ingram, the co-founder of Galileo Capital and a certified financial planner, talking tonight about whether the stock market is in a bubble. And you can imagine what happens if a bubble bursts. Suddenly, as an investor, you lose a large amount of money. Warren, I imagine this is a question that people ask all the time in all sorts of sectors in particular, and for various reasons, perhaps quite a lot more recently.
You're absolutely right, Stephen. I think if you look at what's gone on in the last while in the US, where we've seen those very big tech shares just jumping up again and again and again in price, it becomes concerning for a lot of people because logic dictates that something can't carry on going up forever, and we would be tempted to think, well, what on earth do a few tech shares have to do with a South African investor? But unfortunately, the US is by far the biggest stock market in the world, and when you look at its value as a percentage of the world stock market, it's somewhere around 2/3 to 70%. So if the US stock market has a big correction, a big burst, then it unfortunately will have a big impact everywhere. So it is a concern for a lot of people right now, and quite a few people I'm hesitant to say old enough, but old enough to remember what happened in 2008, and certainly the last very big bubble that related to technology was the IT bubble that burst in the year 2000. So it is top of mind for a lot of people, and a real valid question. Are we sitting in a situation where we've got a bubble that's about to burst on us?
How do you identify it? And I realize that's an impossible question because, some people I think will immediately look at, well, how quickly has this value arrived and could it go equally quickly? But are there any sort of ways of pre-identifying a bubble?
I'm going to sit on the fence a little, but give some good pointers. So one, whatever we look at, you're right. It's impossible to make a absolutely iron cast prediction to say we're certainly in a bubble and it's about to burst, or everything's fine, don't worry, and then I know what will happen is it'll burst tomorrow. So what we need to know about bubbles is that they become a psychological phenomenon. So it's not a calculation where you can say, well, if the 10 biggest shares are trading on valuations of 50 PEs, and I'll maybe explain that now, but if that's the case, then you're in a bubble. It would be lovely if there was a very simple mathematical calculation, but it's not. And why PEs are important is it tells us about the actual value of a company. So instead of talking about the share price, where we would say, well, 10 years ago, the share price was $1 per share, and today it's $1,000 per share. It's a phenomenally expensive share. That's not really a measure of a value of a business. What you have to look at is what's the PE ratio. And the PE ratio says how many years of current profits do you have to justify to pay the price today? In other words, if the PE is 50, that means it's 50 years worth of profits to pay for the share price today. And that's a phenomenally expensive company. So PE is very important. And you would think, well, we could just look at the PE ratios and everything will be fine. But that's not true, because if companies do very well, if their profits tend to grow, then the PE ratio might actually come down even while the share price is going up. So we've got to look at this and say it's not mathematical, it is psychological. And there are, I think, three factors that we can look at. And the first one is a wonderful phrase coined quite a few years ago by the chairman of the Fed in the past, Ben Bernanke, and he spoke about irrational exuberance. And essentially what that means is the economy is pumping, the bulk of and we're talking about America now particularly, but the economy is pumping. The bulk of people who want a job have a job. Their salaries are rising. They feel very comfortable and confident that things are going to continue getting better, and they can't see any reason for things to go wrong. So I don't think we're in that state right now. I mean, yes, the American economy is at full employment, and salaries have started to rise, but a lot of Americans are very unhappy because they've got a cost of living problem where cost of living is going up much faster than their salaries, and people are not just generally happy. I mean, there's a reason why so many of them voted for Donald Trump. It wasn't because they were all thrilled with what was going on under Biden. So I don't think we're in a state of irrational exuberance.
I mean, I suppose I'm sorry to interrupt, but I mean, I'm reminded of what happened before the Great Depression, where people did think things were going to get better, and when it burst, it was a big shock. I mean, it's a completely different sort of state of mind now, where people are actually generally pretty unhappy.
Generally very unhappy, even if their lives are actually not bad. It doesn't feel to them that life is good. It feels to them that they're worse off than their parents, and certainly worse off than their grandparents. And I think in America, it's probably true to say that someone who's 25 years old now might actually live a lifestyle that's worse than their parents, but it's probably way better than their grandparents. The size of houses in America is better, standard of living is better, but maybe this is the point where standard of living has started to turn. Having said that, there's so much going on in the world. There's global conflict. Globalization is probably reversing to some extent. Countries are becoming more inward looking, more hostile to their neighbors. We're not in a good space. So I agree with you. I don't think everyone's all happy and kind of living in the roaring 20s of the 1920s sort of style of life.
One of the other things, and you sort of point to this around psychology, is a kind of belief in the next big thing. Now, the Dutch, famously, it was tulips. It's something very different now.
It's definitely not tulips, that's for sure. So I think we saw a little bit of this kind of mania when OpenAI launched ChatGPT 3, and we saw a lot of hype. People kind of downloading this phenomenal app that was going to change everything and make everything easy tomorrow, and so that built a little bit of momentum for a short period of time. And I think people started to become convinced that AI was going to be a transformative technology. But having said that, I think that sort of major excitement might have gone out a little bit. I think people have started to play with these AI chatbots a lot more, and they're realizing that in some instances, that they can make a difference. They can make life a bit easier. In some instances, they're making life a lot harder, and actually it takes more time to interrogate the chatbot than it does to just do the job. And so I think the skepticism is there, and I think business leaders are certainly looking at it, and they're spending some money on technology. But equally, there are lots of people out there saying, you know what, this is an important technology. It's going to lead to changes in the way business gets done in some respects, but some of the life-changing, business-changing kind of hype that was there in the beginning is probably overdone. So I don't think the whole world is stuck on this next big thing is going to change everything next year hype that we might have seen in the past. I don't think we're ticking that box with this kind of belief at the moment, Stephen.
Your questions for Warren Ingram, personal finance this evening, 011 883 0702 021 446 0567. There's another issue you point to, which is FOMO, fear of missing out.
I think we have such a great example of this. When Bitcoin really started accelerating in share price properly and went onto the radar of everybody, and I always talk about my hairdresser, and my hairdresser, when he starts telling me to make investment decisions, I know he's my indicator. He's the canary in the coal mine, because I know him very well, and he's not an investment guru, but what he does do is he listens to his clients all day long, and when he starts telling me about an investment theme, I start to pay attention, because it means that there might be this FOMO hype that's built in. And that's what happened with crypto. People had no idea what Bitcoin was. They had no idea of the underlying drivers of what was making Bitcoin interesting to some people and potentially a transformative technology. But what they did know was their mates were talking about it. There were the handful of stories about how much money you could have made. And so people started piling into something simply because everybody else was doing it and they didn't want to miss out. And that's a critical condition for a bubble. When people are just piling into the stock market or the currency market or whatever the market is of the moment with no logic. And I think that tulips is probably a great example of that. People were buying tulips for no reason than because everyone else was buying and they didn't want to miss out. And I'm not convinced we're in the FOMO state of mind right now. I think we were there with crypto. I think that bubble did burst. Yes, it's come back somewhat since then. But I don't think people are buying into the stock market at any price and without regard for potential risks. So I'm saying we're not ticking the FOMO box either, Stephen.
I suppose the other thing about a bubble, and this is a strange thing, is that if people kept buying, the bubble wouldn't burst. So it's much more psychological than value driven, because it's really based about the future perception of value.
You're right, and we're in a space where when we get into a bubble, people stop thinking about 2, 3, 5 years time. They start thinking about how much money they can make in a week or a month, and they start to do silly things like they borrow money on their credit card. They sell. I've seen stories of people selling their homes to get the money out of the equity in their house so that they can become day traders, and you start to see really crazy behavior because people believe there is only one direction that this market can go, and it's up, and it's going to go up very quickly. And that sort of psychological phenomenon, you see it in the madness of crowds. And to be, when you look at a typical mob, the mobs are not intelligent. They're not the aggregate of everybody's intelligence in the mob. In fact, they're worse. The average intelligence of a mob is below the lowest intelligence of anybody in the mob. And I think that's what happens when you look at markets, is you see people just stop thinking altogether and just start acting on kind of a large mass mentality, a herd mentality. And we're talking about bubbles now, and so that's when prices are rising. We see that equally when people reach a state of fear and the panic spreads, and then people stop thinking in reverse, and they just sell everything because they believe there is nothing in the world that will ever go up again, which is obviously not true. So I think we're when we're in a bubble, we're in a state of greed, and it's immense greed, and it becomes this force of nature, and it's very hard to stand in its way. I think often you have to get out of the way, but you don't want to participate in it. And that's what I'm struggling with right now, is we're looking at a market that has done very well. The US stock market's done very well for a period of time. Share prices have been rising. Valuations of the tech shares are high. And so that's not a good sign, because when you buy a company that's expensive, it's not likely to double in value over the next 5 years. It's probably more likely to either remain flat or to go down. But that doesn't describe every share in the US or every share in the world. So what we're in now is a situation where some shares have done incredibly well, and others, particularly if you're an index investor in the UK, you must be really bleak now. And if you're buying a lot of European shares, they haven't done well. So there are lots of places where you can find value, but maybe not in the big 10 tech shares in the US. And I think that's a distinction people need to make when they're looking at this bubble conversation, which is what people are asking at the moment.
We're talking to Warren Ingram this evening, certified financial planner. We're talking, of course, around how to spot a bubble. 011 883 0702 021 446 0567. Your personal finance questions. Question, of course, from Sipiwe tonight, Warren, saying President Donald Trump's focus, is it a big concern that he's focusing on South Africa? He doesn't understand what's happening here, and I'm worried about his next actions against our country. And in a way, Sipiwe, I think you've summed up the money show for the last couple of days. Warren, I'm worried. Should we be?
I think we need to pay attention. I think one of the things about that I'm learning about Donald Trump is you need to take him seriously, but maybe not literally. And I think that's maybe the great learning from his first term as president. I'll never forget the phrase, I'm going to build the wall and I'm going to make Mexico pay for it. And what people needed to realize there was the intent behind what he was saying and not the practicalities. And I think that's important, understanding that he is a transactional person. And so he looks at South Africa. There is something that he wants from us. Or something that he wants us to stop doing, and if we can make it seem that we've given him his way, then his focus will move elsewhere. And already, I think, a country like Jordan is starting to feel that, Jordan and Egypt. So number one, Sipiwe, it's very unlikely that he's still talking about South Africa in a year's time. But number two, our government needs to be very smart about understanding what he wants, and then making sure that we either are prepared to give it to him or that we find a way to get off his radar, because you cannot fight the American government. You can't fight the size of American money, and you don't want to set yourself up in opposition. No, even if he doesn't go as far as, sanctions and all of those things, which I see some people are writing about, and I think we're far from that. But if he just stops trade deals, etc., that can get us, into severe difficulty. So I think strategically there are things we need to do, and one of them is we can't be belligerent. We're not big enough to be belligerent, and to feel like we're morally right. That's great when you're sitting on enormous amounts of money, but when you're not, you've got to be careful. And so I'm hoping that he moves on and that we do something to kind of make him feel like he's got a victory, and then we carry on. What's very interesting to me is if I look at the rand, I look at our stock market. We're not sitting at 22 rand to the dollar, and our stock market hasn't lost 30% of its value. And that tells us something. It tells us that the bond traders, the stock traders, and the currency traders are looking at this as some kind of an issue. Yes, things have moved a little bit, but they're not in deep panic and selling South Africa out completely. And so I think we should not be complacent. We require our politicians to do something unusual, which is to act quickly, act sensibly, act rationally, and to try and diffuse the Americans as fast as they can. And we've got a very long history over the last decade or two of voting against America almost every single time on principle in places like the UN, and we need to stop doing that. But we can get through this if Trump moves on and we do something right that he wants. And I'm not saying right as a moral thing, but just play the game correctly. That he's playing a game, we have to play his game. We can't play our own. But I'm not panicking yet. I am concerned. I am watching, and I ideally hope that he kind of behaves like he's done in the past, which is he moves on to something else, once he's got some kind of a victory. And I feel that's what we need to do, is give him a victory. But what I really like, Sipiwe, is we've got one of South Africa's best political minds asking the question. We should be asking you, Stephen, what do you think?
I'm afraid to say I am not convinced Trump is going to go away, because I think we are everything he stands against. And that is what concerns me. So we will have to see. Also, Elon Musk, of course, in his ear. But I suspect where I think it's going to get very interesting is I think he might move on from Elon Musk at some point. And that's really where things are going to get very, very interesting. But Warren, it's a reminder of how one election can change the world for investors very, very quickly. And the election in the US last year was such an election. It was such a big political event that's going to have ramifications for shares in different places for a long time to come.
It will, and it will create volatility. But I think one thing we need to know about stock markets is investors tend to get used to things fairly quickly. So once they understand what the new normal will be, then they adapt to that, and they then invest accordingly. So I think understanding what Trump's mandate is over this next 6 to 12 months will set the tone for the rest of his term. And at the same time, there's a lot going on in South Africa that's very positive. If we see a sensible resolution to the NHI funding, for example, I think that was a huge risk that might be, kind of negotiated off the table. If we keep doing the things that are sensible as a country, then I think we get ourselves through this, maybe come out the other side in a much better position. So I'm not panicking about Trump yet. I might be naive, but I think he's going to focus on a lot of other issues as well.
Warren Ingram, thank you very much indeed. Always good to talk to you, and of course, interesting to hear your thoughts about what is happening around that and the whole idea of a bubble which could at one point pop. Warren Ingram is co-founder of Galileo Capital and, of course, a certified financial planner.